Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, in the second video today, let's take a look at the British pound. So in the gold market, mostly the situation stands the same. Market shows minor pullback up from the lower border of the rectangle that we have talked about. Here you can see with the no testing of the OP target. This is really typical for the gold market, but it doesn't mean that market will not hit the OP target. So actually the setup that we have talked about is still valid. That's why currently I do not see some reasons for updating the gold market. Let's take a look at the British pound. Here on the pound, the situation stands really tricky. And as we have mentioned in the previous video, market was under the pressure for so long period with this postponing of the Brexit voting, the failure of the voting, failure of the agreement in the last voting that has happened a few days ago. So, and that was really very frustrating situation that keeps the negative sentiment on the market. Since the negotiations and the adjustment of the agreement right now stands in place and was postponing, that should give market some relief. So it could breathe a bit wider, and I do not exclude the chance that market will show a bit deeper upside pullback just by the emotional reasons. So this is technical emotional reasons. This doesn't care. It doesn't care any fundamental background. Something is changing, an improvement in the United Kingdom economy or the Brexit negotiations. But this is just some technical and emotional issues. This happens very often because the adjustment of the terms of the discussion of the agreement on the Brexit and postponing of the voting and agreement discussion. So this increases the chances that maybe something will change, and that brings some positivity on the market. Besides, I'm not exclude totally the chance that Theresa May could come on an unprecedented step, an unprecedented measure to initiate another voting on the Brexit among the population, because guys, the hard Brexit and some adjustments in the agreement, actually there's no room actually for some adjustments, because European Union said that no adjustment will happen. But hard Brexit is really big, dangerous and phantom menace that United Kingdom could turn to the England. So it could be Scotland exit, it could be the border and again the division of the Ireland. So this is really could become a really big bump under the United Kingdom. So, and in such circumstances, I would suggest that the one of the resolving of this problem, it could be either the cancelling of the Brexit at all, and applying this measure by the initiating of the second voting on this problem. That could be really the solution. If we see this on the horizon, some bullish trend on the Great British pound could become more visible. But we should keep in mind this possibility, because this is one of the most and easiest way to resolve this problem, because currently I do not see any ways how Theresa May could resolve the problem with the failure of the agreement and offering something else to the European Union and to the politicians inside the country. So sorry for that long-term preliminary discussion. From a technical point of view, it could mean that market initially could show a bit deeper upward retracement. So on the weekly chart, I will not be surprised if we will see even action to the 33 area, because this is, guys, actually just the 30% resistance of the downward action. Since market hits the COP, it was also the weekly oversold. Butterfly has been formed. It's no problem that market could show the just 30% retracement. That will be also weekly overbought, if you will see. We have the bullish divergence with the MACD indicator, with potentially very often suggest the taking out of the previous stop. And retracement at least to the 30% level, it really could happen. But that is a bit longer term perspective. On the shorter term, if you take a look at the daily chart, last week when we talked about the Great British Pound, we said probably some minor pullback should happen because market stands in the overbought and market stands at the long-term resistance area. So here hardly we will see the breakout on the last week, and indeed that has happened. Market has shown the pullback. Besides, on the intraday chart, that was also the COP target. As you can see, we have this A, B, C bottom, and that was also the COP. Now, the reaction on the COP is over. Market turns back again to this resistance area. So you can see market right now testing it again. And here we stand at the crucial moment of the breakout. So to support our view, support our ideas, market should show the upside breakout of this area. Next target, if this will happen, will be at the OP targets in 31.85, and that also will be the target of our double bottom pattern that we have talked about previously. So take a look, it's a bit not quite symmetrical, but still it's kind of the double bottom you could recognize. This is the first bottom, drop at the Washington rings of these lows, return it back up, and the second bottom has been formed. The classical target of the double bottom stands also right here. So around 31.70, 31.85. So the next destination point. Currently, as you can see, market is forming some kind of the flag pattern below this consolidation, so maybe the breakout could happen. On the hourly chart, I did not see something special. I thought that maybe we have the free drive pattern, something that sort with the 31 target, but the extension stands too wide from each other, and actually I do not see something really special here on the hourly chart, so keep an eye on this one. There's different ways how you could try to possess yourself here. If you're indeed watching for taking the long position, you, for example, could apply the entry long stop order above the stops. So, for example, if market will break this stop, you could use the stop entry order. When the market will just shows the breakout, you will be in the market, and market could continue to move higher. Well, another opportunity is maybe to wait for the breakout and wait for some pullback is also possible. So the failure of the upper breakout in turning down again, that will be, guys, the sign that probably market will not show the breakout anytime soon. Potentially we could get kind of the, for example, I don't know, Gartner's triple 2 buy, for example. If we will get here, it could be Gartner's triple 2 buy from the confluence support that we already have talked about, if deep retracement will happen. But anyway, this will mean the same story, that today and within the couple of sessions we will not get any upside breakout. So currently market stands at the point where either upper breakout will happen or market will show the deeper pullback right back down to the neckline of this pattern. In general, as you can see, price action stands very choppy, and that just confirms our view that no real purchases stand beyond the Great British Pound right now. This is mostly the technical issue, emotional issue, and market just gave some relief off from the story and the events, political events that has happened recently in the United Kingdom. So that's why this overall setup is not really very clear. It's a bit tricky, but we see that we see. So let's keep watching what will happen here.